There are many different ways to invest in cryptocurrency. Number one, you can do a crypto IRA. Number two, you can do crypto and cash. Number three, you can directly invest in companies developing cryptocurrencies. Number four, there's going to be blockchain ETFs that are coming out. So let's go through each of them. A crypto IRA is a common term used when you want to put cryptocurrencies in a self-directed individual retirement account, or an SDIRA. Yes, you do need to open an SDIRA first. Not all IRA companies provide SDIRA services. Our partner, Equity Trust, is one of the few reputable ones and one of the biggest IRA providers. They've been in business for over 40 years. And an SDIRA, you manage your assets yourself, hence the name Self-Directed IRA Services. There are different assets you can put there, including cryptocurrencies. This is best for people who want to hold cryptos for a long time because there's a lot of tax benefits of holding it in an IRA. With a traditional self-directed IRA, you can defer payment of taxes. That means you pay nothing now and then you'll pay the taxes later. Contact your financial advisor to learn more about this, but just keep investing and you let it grow. With a Roth self-directed IRA, you pay the taxes now, so you don't get that tax advantage, but you don't pay anything at the end on retirement. That means you don't pay anything down the road. So let's assume you buy one Bitcoin today in a Roth IRA for $35,000. You don't save any money on the taxes the year you put that money in. If after 10 years, you turn 50 and a half, you want to cash out and that Bitcoin's worth $100,000, that's a $65,000 gain. You keep that in the IRA, you don't pay any taxes. Crypto IRA is obviously meant for people who want to grow their wealth for retirement. Next option, trading in cash. It's like stocks, but you trade crypto instead of stocks. There are many platforms that allow you to trade crypto, but you got to be careful. Not every platform was made the same way. With Robinhood, for example, you can't take crypto out of their system. That means if you want to take physical possession of your crypto in form of private keys, you can't. The only way you can take your investments out of Robinhood is by liquidating it, which is not always ideal. They've also been known, and don't quote me on this, but they've been known to sell their data. And there's been a lot of articles about that, so you want to be careful. My Digital Money, our company, will never sell your data. We're here to help you invest, plain and simple. You can also invest in companies developing crypto. That's another option. Developers usually go to investors to fund their projects. And no, you don't have to be in the millions to be able to invest in a company. You can be an angel investor. Usually you need to invest hundreds of thousands of dollars, but crowdfunding platforms like Funders Club or WeFunder allow you to invest for as little as $100. Needless to say, in that type of investment, the risk is higher. You're investing in companies that are just starting up. So you really want to be careful. And you want to consult other angel investors and do a lot of research. Even if you're just investing $100, that's still $100 you'll never get back if things don't work out. Lastly, blockchain ETFs. Blockchain exchange traded funds own stocks and companies that have business operations in blockchain technology or some way profit from it. There are two types of blockchain ETFs, passively managed and actively managed. In a passively managed ETF, a fund manager buys a basket of blockchain-related stocks that make up a broad index. Through one of these investments, you gain exposure to the entire index. This process eliminates the need for fund managers to select individual companies at their own discretion. Contrary to index funds, active investing depends on fund managers' ability to pick securities and provide above average returns. As a result, these investments often come with higher fees and greater volatility than passively managed ETFs. Blockchain ETFs don't hold cryptocurrency investments. Instead, these funds only own stocks of regulated companies, which are blue chip technology companies like Visa or Oracle. For you to determine how you can best invest in a crypto, I recommend you contact a financial advisor. Do your own research. If you feel crypto IRA or trading in cash are two strategies that you want to use, call us. We can help you. My Digital Money offers both services on one platform. No need to open an account on multiple platforms. You can do it all in one place. Just go to mydigitalmoney.com.